What is good, everybody? Charlene here, back with another YouTube video. First off, I want to say thank you to you guys that are taking the time out to visit my channel. Please go ahead and drop a like and subscribe if you like what you see. First off, I want to basically give myself a little pat on the back because today I hit a major milestone, at least for me. I hit a $10,000 day in the markets today, which is, mind-blowing, absolutely mind-blowing. I've had a $10,000 week before, but never a $10,000 day. So that is pretty dope, and pretty proud of myself, actually. So this YouTube video is going to be the first of like a part one, basically, of a two-part video that I'm going to be dropping. This video is going to be about breakouts, okay, how to catch breakouts. So, a big move that I caught on a trade in London session last night was the result of a breakout that took place, and on that breakout I cleared about 5K. Okay, that was basically half my trade in that one trade. Okay, and that was on a breakout that I anticipated, and I marked up and played out perfectly to the T. I didn't expect it to hit the way it did, but I was pretty confident about the move. I was confident about my markup, like I always am, and it was a pretty dope move, and I'm really excited about the way it played out. So today I'm going to be basically breaking down. It's going to be a short video. It's not going to be too long. I'm breaking down breakouts, how to identify them, how to catch them, how to do your markups to plan out for them. Basically just how to look for the breakouts and how to capitalize on them massively. Okay, because breakouts are probably my favorite moves to catch out of the market because they happen all the time. They're easy to catch at times if you have experience in catching them, and you have experience with whatever pair you're looking at. It's not hard to catch a breakout, and if you catch a really good breakout, I mean, that could make your week pretty much, because the longer a pair ranges, consolidates, the more stronger the breakout is going to be. The thing is, you don't know when the breakout is going to happen, but it's coming. It's coming for sure. Okay, you can find them on the higher time frames, like the weekly, the dailies, the 4 hours, 1 hours, but you want to catch them mostly on the the smaller time frame, like the 15 and the 30-minute time frames. And as a scalper, everybody knows I'm a scalper. I normally catch them on the 15-minute and the 30-minute time frames, and I plan out. Usually I jump in as an impulse entry on most of them if I'm watching the charts. But if I'm not watching them, and like I said, you don't know when the breakout is going to happen, but you want to be in the trade if it happens, when it happens, at the right position. So you set up a buy stop or a sell stop, and then you anticipate for the trade to hit it, activate it, and go in your direction. And hopefully you have a TP set up, or you're watching it, or you have some sort of price alert that's gonna let you know when your price was activated, and when you need to start looking at your trade to make sure that it's going in the right direction for you. Okay, so basically it's not gonna be, like I said, it's not gonna be a long video, but let's jump right into it. Okay, I don't want to waste any more time talking a lot of gibberish. I'm just super excited about today. I'm really proud of myself and come a long way with trading. Forex has been definitely a blessing for me, my friends, my close friends, my family, and I'm going to be trying to dropping videos, dropping golden nuggets, dropping knowledge, dropping value on you guys every week if I can. Find the time to do that so that, other people can benefit from this wonderful thing called Forex. Okay. All right. So we're looking at the daily time frame now. I'm looking at the daily time frame now because this is where you want to see the big breakouts. Okay. This is how you can see the entire market. Have a decent idea where breakouts are. Okay, if you're looking at the daily, I'm not going to go any higher than the daily. We don't need to do that. We can see them just clear on the daily as we could on the on the weekly or the monthly time frames. Okay, so if you're looking at the daily time frame, a breakout would be something like this right here. Let me use my arrow here. Would be something like this. Okay, something like this candle here. When you see big break, like big body candles kind of shooting in one direction and shooting back in the opposite direction or continuing up, that's what you can call a breakout. Okay, so let's open this up a little more. All right, so basically if you look at something like this right here and you see the market, well, this really isn't consolidate. This is more consolidation right here. All right, this little area right here, Okay, now this is the daily time frame. Okay, so these are all daily candles. All these candles took place within a day. Within a day, a candle did that. Okay, so this is a whole crap ton of ranging. Okay, when you see little baby candles like this kind of bouncing up and down, kind of printing side by side right next to each other, this is a whole bunch of ranging. Okay, this is like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is a lot of days of just plain ranging. And this breakout, this is a breakout, guys. Okay, when you see these candles start forming down and it breaks below all of this right here, this candle took out all these lows and it continued down. It was already in a downturn trend, so it was kind of consolidating and ranging, but it was ranging more, in a downtrend motion. So we were still moving downwards, so we could anticipate sells on here. But because these tiny baby candles were forming up here, we can consider this kind of a mini consolidation, mini range over here. Okay, this candle will be considered a breakout candle. Okay, so how could you plan for a trade like this when you have these candles bouncing up and down? Good question. Okay, so let's go down the time frame here. Okay, let's bring the chart in a little more. Here we are. We're right here on the trade. Okay, bring this up some, pull this out a little bit. These charts can be quite tedious at times. Okay, so all this right here, this is ugly. Okay, this is a bunch of ugly mess right here. Okay, this can be considered a breakout right here. Okay, this little push down here, this can be considered a breakout. How do you plan for something like this on a 4-hour time frame? If you look here, you'll see that all of these moves kind of mirror each other if you pay attention. Okay, so at some point something was going to happen where it was either going to break up or break down. Okay, we don't really know what direction it's going in right now, because if you put this arrow here and we put another arrow down here, okay, we kind of have a support and resistance level marked off here, and price is kind of bouncing around inside this level. So how do you plan for trades like this? You mark off your support and resistance levels, okay, and whichever angle or side the trade breaks out on is considered your breakout. Okay, so up here, like, this can be kind of a fake out up here, because if you look at this candle right here, this 4-hour candle right here, look at how price came up and price gapped right here. Okay, so this probably was like a Sunday, a Monday, probably like a Friday, I would say. Right here, price closed right here on Friday, and then it gapped up here coming Sunday when market opened up at 5 p.m. So market gapped, came up here, kind of bounced around and came down. So usually on GJ, it always fills its gaps. So whenever you see a gap, the gap always gets filled one way or the other. So this right here, price came up, wicked out up here, and then what did it do? It came right back inside this box right here, this little support and resistance, supply, demand, whatever you want to call it, box. It filled up, and then it broke down and continued to range again. So these two lines, you could take this and move this right here, and you can take this and move it right here. Okay, now you have this consolidation area going on here. Let's move this screen over a little bit. Okay, you have all this consolidation stuff going on in here, and then what do you have? A breakout. Okay, this is considered a breakout. Why is it a breakout? Because it broke out of this zone that it's in. Okay, this range that it's in, it finally broke out. And every time you have a breakout of a zone, 85% of the time with GJ, it's like maybe 65-60% of the time, but with most pairs, you're going to have what's called a retest. Okay, this is a retest. A retest basically is where price comes back to where it left, a level that it left, comes back to see if that price level will hold. Okay, so for instance, if you're in a sell here, okay, and price broke down, went bearish, came back up to retest this level. Okay, price had held this level for quite some time, finally broke through, and what's it going to do? It's going to come back to see if price really does hold for it to continue back down. Right now, sellers were in control. Okay, broke down. Buyers came into control for a short amount of time. Buyers tried to take the market back up, and what happened? They came back to this price level, which is 135.273. Came back to this level, and sellers said, we ain't letting you go back up past this level. We're coming right back down. And sellers came back in the market and pushed the market further down, and then it kind of came back and forth. Whenever you have a market that's ranging, consolidating, prices kind of, bouncing up and down, candles are kind of printing right next to each other, you have a tug of war going on between buyers and sellers. You don't know who's going to win it. You basically got to sit back and just watch and let it play out. And if you're good, you catch a trade inside of that. And if you're not, you want to sit back and watch and wait for some sort of breakout. Now, if you want to catch a good breakout, what you want to do is wait for the breakout to actually happen. Okay, so on a trade like this, okay, where you have this kind of breakout right here, where you have this breakout right here, what you want to do is not jump in when you see this candle start forming down here, because this is what most amateur, like rookie traders do. Okay, they see a range happening and they see it, they're waiting, and once they find a candle that's breaking out, this candle usually breaks out strong. Okay, it's going to break out strong. This is 5 a.m 9 a.m this candle broke out at 9 a.m in the morning, which is right after New York open. There's a lot of volatility in the market, so most people are going to see this candle break out and they're going to, oh snap, this candle's breaking out, I got to jump in the trade. And what are they going to do? They're going to jump in the trade because they see it coming down, and market is going to slap them in the face because it's going to come down. It's going to create a little support right here. Then it's going to retrace back up to do what? Retest the level it just broke. So if you are an experienced trader, a smart trader, you're going to let this breakout go and you're going to wait for the retest. And then you're going to look to enter this trade. And if you're trading price action, you're going to enter the trade somewhere down here because you want to see price break all the lows for it to continue down in momentum. And if you're a technical trader and you go off of, things like Fibonacci or, just break and retest type deal, you would enter up here. Okay, you have your little wick out here, continue down, and then your risk reward is very small because you could put your stop loss kind of somewhere up here and then run your trade down. So if you're in a short trade here, okay, your stop loss would be kind of right above the level, right, maybe like right here. Okay, right inside this zone here, and your TP would be, wherever the last support level was found. In this case, it was down here. Okay, in this case, you're looking at a 24 pip stop and a 131 pip gain. Okay, that's a very, very, very good ratio in terms of trading. As you can see, this was a very big breakout. Okay, and you see here that this was a tiny breakout compared to the actual move. So this is the real move right here. This is the overall move right here, and this was the beginning of this move. So the breakout happened here. You want to wait for the retest and then ride it back down. Very simple strategy on how to catch breakouts on a break and retest. There's break and retest breakouts. There's impulse entry breakouts. I do both. Okay, but with GJ, GJ is super volatile, especially in New York session. If you're trading GJ is notorious for not retesting. Sometimes the breakouts are so strong that it just busts out. In other words, if you look here, this is a perfect example. Price came back into this level here. So what did it do? It made another level right here. So I'm going to leave this line here. I'm going to put this right, let's say, down here. Okay, because price came down and it closed above. All right. So we have another level that was here. We had one here, broke out, formed again here, broke out, formed again here, and then what we have, a breakout. This right here can be considered a beautiful fake out. And I say beautiful because they are. Okay. The market has something called a liquidity grab. Okay, what it does is it ranges for a little bit, takes some money of people that have trades going on in here, and what it does is it starts forming higher highs and higher lows. So in here you have a whole bunch of higher highs and higher lows being formed, and what's it doing? It's telling traders, oh, the market's gonna break up. The market's gonna break up. It wicked all the way up here. Okay, the market came all the way up here to this level here. It came up here, and what did it do? It broke all these highs. So a trader like me, I probably would have entered this trade. I would have probably entered this trade because it broke all the highs and it was in a range. So this probably can be considered a breakout. But an experienced trader like myself probably would not. Here's why. Because what do I have to my left? A crap ton of ranging. Okay, the whole ugly level that was going on up here. I can't forget about that. Whenever you have ugly ranging like this, you want to be cognizant of it because it can affect your future trade. So this came up. What did it do? It rejected right up here. It rejected at this level right here, which is where? Right in between all this mess that you have going on in here. All right, this is a mess. Okay, this is all mess right here. Price came up and it wicked out up here, and then what did it do? Came right on back down. With GJ, here's a golden nugget for you guys. All right, when you are trading GJ has a tendency to fake out in one direction and continue its way down in the opposite direction. So if this is a fake out trade, it's going to come up, wick out, and then it's going to continue back down. So if you see a trade and it breaks up and you see it fake out and forming, and then it starts to come back down, you can be confident in that trade that this baby's going to come down, because DJ always does that. When you study enough, when you focus on a pair enough, and you understand how it moves, you will know what it's going to do, when it's going to do it. So if this is not a real breakout where price will just continue up and it's a fake out, it's going to come down. The only downside is you don't know if it's going to be a fake out until it happens, and that's just a downside. When you're inside of an impulse trade and you think it's a breakout and you want to take the trade, that comes with, it's a very high risk trade because it's an impulse entry. You're not waiting on a retest, so the probability that it's going to continue is kind of low. And the second part of that is you have to manage your trade at that point, because if it is a fake out, you need to know when to get out of the trade. Okay, I would not have gotten into this trade for the simple fact that I have all this ranging here. If I had some clean candles pushing up here, for sure I would have got in, and it probably would not have been a fake out. In that sense, it probably would have continued up, but it did come back down and continue down. So this is a perfect, beautiful example of a fake out breakout, and the real breakout right after. Okay, and it continued right back down, formed the resistance up here, and then continue right on back down, right past this zone here, and continue down with these beautiful big bearish candles to form all the way down. And I don't even want to know how many pips this was, because this is a huge move. And then what did it do? Came back up here, kind of retraced a little bit up here, and then continued right back down. Like, this is a massive move right here for 284 pips, guys. That's a lot of pips. Okay, you throw one lot, a standard lot on there, and you're leaving with at least $1,000 per that trade. Okay, that's beautiful trade. All right, so let's try to find another example here. Okay, so let's take all this off. And let me go back to my daily. All right, I'm trying to keep this video short as I can. Hopefully it's not too long right now. Let's let's look at the trade that I took. That was going to be in my next video, but I could talk about it in this one. Okay, let me go. Hold on. Let me try to find this trade here, guys. Give me 1 second. Okay. All right, it was on a sell. Okay, so it was in this area here. So I took it at 135,750. Okay, so I'm gonna put this here. 135,750. 135,750. Okay, took the trade here. I probably took it in this area right here. Yeah, it was right here that I took that trade, guys. Okay, I took it there, and then I exited at 135,473. 135,473. 135,473. Okay, that was one of my entries, guys. Okay, let me highlight this so we can drop down to the 4-hour time frame so you guys can see. I'm not going to drop down to the lower time frame. I'm just going to keep it here for you guys. Oh, no. Yeah. Wait a minute. Hold on. I got to find the trade again. And I took it at, I think that was London session. Was that London session, or was that Tokyo session? I think it was Tokyo. Hold on, guys. Let me see if I can find it. Okay. I'm going to take these off so I can make it a little more streamlined. 722. Yeah, 20. Okay. So it was in this area here. Okay. 135,750. Okay. 135,750. Okay, and let's do one more at 135,473. 135,473. Trace. And I took a sell. Oh, here we go. All right, sorry about that, guys. Here we go. I see it right here. Okay, this kind of sort of was a breakout, but it wasn't. But in my case, it was a breakout. I'm going to explain why. Okay, so I took my entry here. Okay, the candle took it right here. What did I have right here? Right, I had a whole bunch of ranging right here. Okay, so most likely I had my levels put right here, Okay, and I had another level kind of down here. All right, I have my resistance and my support levels labeled off down here. So when I have this here, that means price is forming, you know, wicking out kind of little candles. This is a whole bunch of ranging, and this is on the 4-hour time frame. So this is a whole lot of ranging inside a 32 pip range, okay, which is a lot of pips to catch a trade in, okay, but I don't want to take a trade in here. It's too risky, okay, it's too much up and down, too much back and forth, printing back and side by side trades. I don't want that, okay. I want a nice clean breakout trade. So what am I going to do? I'm going to map out my trade here, okay. I'm going to look at my chart. I'm going to see to the downside I have these beautiful big bullish candles to the downside here, and then I have this resistance level labeled off right here. So I know if I take a trade, I know my TP needs to be somewhere in this area here, which is fine, okay. But if you look at, if you measure this, this is a 100 pip, 80 pip move, okay. I don't need all that. Nice to catch, but you know, most likely it's not going to happen all at once, okay. So I'm going to let a breakout happen either to the upside or to the downside, and as you can see, price came all the way down, closed, wicked out, and then came right back up. This is considered a fake out, a big fake out, but a fake out nonetheless, okay. Why is it a fake out? Because it did not continue down. It came down, and what did I say GJ likes to do? Likes to come out, break out, continue down, and then continue shooting up in the opposite direction. Right now GJ is bullish, coming down to probably make a retracement up here and continue up, or if it breaks this level here, it can continue down, okay. I have a feeling GJ is going to continue down. That's my analysis for tonight, even though right now it's ranging, okay. So I caught this trade right here. Perfect entry for me. Why? Because it broke below all these baby wicks, okay, all these wicks. It broke below all of these wicks down here, and it continued down. These are kind of minor wicks. I don't have to worry about these. I'm not worried about these because these are kind of back here, okay. These all are in front of these candles, so these mean more to me than over here, okay. So on this trade here, this candle broke down. I saw it busting down, broke below these lows, and I took my trade. And I closed out right here, right at the bottom of this here. Could wish I would have caught it down here, but whatever. Still made profit, okay? Pushed down, and I closed it. This trade, I don't know how long this trade took because I had a sell stop set at that level, and I actually fell asleep. And when I woke up, I was in $5,000 profit, like 5,200 profit, something like that. But I know I woke up and I just closed out. I just closed out my trades, took my profits, and left. I didn't even care how far down it went. I was just glad that it played out that way. And it's a good thing that I did, because what happened? It wicked out right around the area where I closed out my trade. And then what? It pushed all the way back up. So if I would have let this trade run, I would have lost all my profits, because it just continued retracing right back up. And it pushed up strong. Because why? DJ fakes out one direction and pushes up strong in the opposite. Okay, so catching breakouts is very simple. I only gave 2 examples, so I want to keep the video short. I'm going to have a lot more examples in my course that I'm still building and working on right now. I'm going to go more into depth with that. But with breakouts, you want to catch them right after consolidation, right after a long ranging. The longer the market ranges, the stronger the breakout is going to be in every which way, every which direction. If you don't know what direction it's going to go in, which in most likely cases you don't, sell stops. Use your sell stop or buy stop. Use your stop orders, because those will save you the trouble of watching your charts, anticipating when a breakout is going to happen. You know, Forex is mostly about being patient, letting the market come to you. But if you're impatient, it's not going to work for you, because you need to let things play out. You need to let things form. You have to give the market time to tell you what it wants to do, so you can be able to trade with it and not against it. Okay, so that is my video on breakouts, on how to catch breakouts. What to look for on your breakouts, how to anticipate them, and how to also anticipate fake outs also, because fake outs are notorious with Forex, and you have to battle those when you're trading. Okay guys, so that is that video. The next video I'm going to be shooting is showing all of my trades that I took that got me to my wonderful and amazing $10,000 day in the market, which is I mean, beyond amazing. Such a blessing to be able to have this opportunity to learn an invaluable skill and be able to take that, monetize it, and not only help myself but help plenty of other people as well. So always stay humble with it, obviously, of course. course. But I'm going to cut this video here. All right, and I'm going to go ahead and jump right into my next video about mapping out all the trades that I took for the $5,000 day, $10,000 day. Sorry. Okay. So hope you guys got a lot out of this. Please drop a like. Please subscribe to my video so you don't miss anything. I'm going to be coming out with a lot of other topics with concerning Forex, concerning trading, with risk management, with talking about just everything that has to do with Forex. Okay, risk management, starting an account, finding a broker, pairs to look for, trading plans, everything that encompasses trading, how to be a good trader, how to be a consistent, disciplined trader. I'm going to be going into all of that stuff, to be sharing as much knowledge and value as I can to help everybody I can become successful in trading or whatever else they want to do, because trading is awesome skill to know, but it takes a lot of discipline and dedication, and these are things that a lot of things in life require for you to be successful. Okay, so thanks you guys for watching, appreciate the time, and I will see you guys on the next one. Peace.